I think the inflation data which we were discussing has come about 5.79 versus the ET Now poll of 4.8 and 4.5 to 5.1 what the broad bond market were actually indicating at, but definitely this will not go down well with the number. So the WPI inflation for the month of July has been at 5.79. Let's take a reaction from our guests also. Saugata, what do you make? This will definitely be much higher or beyond the range what market was working with, isn't it?
Right. Unfortunately, even I think this is quite stunning. I don't really know what the breakups are, but I just don't see how much will primaries have contributed, and are we completely wrong in our sense of the pricing power of the manufacturing segment, services and manufacturing segment, the breakups will let us know. But this is really surprising and disturbing.
Yeah, we'll just run you through those breakups because it's very interesting to see the way the food inflation this time has panned out, 11.9%. And I think that is the key reason as to why you're seeing that headline number of 5.7%. You've got the manufactured product index that has remained somewhat stable, 2.8% versus 2.7%. And the fuel and power inflation has come in alarmingly higher at 11.3%. Remember, you did have the petrol prices which were raised by 2 rupees per litre, the diesel price hike, ATF prices have also, in fact, seen a surge. So I think all of that will be worked into the headline inflation number. Aditi, wanted your opinion. I know you were working with a higher number, but 5.7%, you're surely startled.
Yeah, I am. I think this is, 60 basis points higher than what I was expecting. So definitely it is a bit of a concern at this point in time. From what you've mentioned right now, it does seem that food and fuel are the main culprits. I mean, fuel, to the extent that right now we also have under recoveries of over 9 rupees on diesel, I think, that remains a concern that is going to continue over the next few months, at least until either the international crude oil prices moderate or the rupee eases off the current levels. As far as food prices are concerned, I think I would suspect that again we've had a big jump in vegetable prices, and that's really what has led to this increase, from the number that we had last month. If indeed it is vegetable prices that have driven food inflation up to double digits, then that's at least something that may reverse over the next couple of months. We've seen several bouts such as this in the last few years, where vegetable prices just drive up food inflation for a few months and then settle back down at a lower level subsequently. So I think even within food inflation, we need to look at the subcomponents pretty carefully to be able to figure out what the outlook is going to be like.
Right. In fact, the stock markets are reacting to that number, the elevated number, the 4-month high as far as WPI is concerned. So Bank Nifty has gone back into the red. There's a pretty sharp knock coming in on the Nifty, which was almost at day's high. So there were two ends of the market. The bond yields were already at a 15-year high and they were surging and are ahead of the WPI number coming out. But the stock market wasn't really taking, cognizance of that particular fact. And look at that. That's the, diversion in the 10-year as well as the 5-year, the long and short. The gap has actually been increasing. That's the rupee reaction for you. Rupee did saw some amount of reaction, but is back at 61.50. So 61 to 62 is the band beyond which it is not really coming out despite the measures being announced. From the stock market point of view, Sangeeta, what is your reaction to it in the backdrop of the 3-day rally of 200 points on the Nifty? The macro continue to remain absolutely weak, and today is an endorsement of that particular fact. Do you see that this reaction which has just happened in the equities may exaggerate into a fall?
I think it's possible. I mean, overall, the environment for equities does remain weak. And I think what is a little worrying about the inflation numbers is that there are structural issues in that inflation if you leave aside the manufacturing inflation, like I mentioned earlier, because fuel prices will continue to rise over the next few months, at least till the elections, because of the under recoveries and the need to get that back into control, primarily, for the issues which are known, to get the fisc under control and also its impact on CAD. And The other issue really is food inflation, which has been a perennial problem and has a lot of structural issues associated with it. So it's a little hard to see, inflation softening materially from here, because the key driver, which was manufacturing inflation, is already at fairly low levels. So I think it is concerning, and it's certainly not a driver upwards for the stock market.